Good morning or good afternoon, depending on which coast you're on or where you are in the world right now. Hello, good to see everybody. And happy St. Patrick's Day. I hope
Mm.
everyone's doing well today. And very excited to have everybody here today. Welcome to today's workshop, Funding Hacks with Founder Suite. Now, my name is Amagella McKelvey Tate, and I am the program coordinator here at the Innovation Cluster. And I'm very excited to have you all with us today. So, for those who may be new to us, the Innovation Cluster is an innovation hub. And we help entrepreneurs across Ontario grow and scale with purpose through mentorship, community, and programs built for real world impact. We greatly appreciate you choosing to be with us today as a part of your own entrepreneurial journey. Now, on to today's incredible workshop. Today's workshop is extra special as it is not only an educational workshop on funding, but also the launch of a great partnership between the Innovation Cluster and Founder Suite. Founder Suite is the leading funding platform for startups raising capital. Over 100,000 startups have raised over $21 million in seed and venture capital. We at the Innovation Cluster are thrilled to be partnering with Founder Suite not only to deliver incredible workshops like this, but to work together to support entrepreneurs in growing successful businesses. Now, stay tuned at the end of the workshop for a special offer. And today's speaker is the founder and CEO of Founder Suite and the host of the popular How I Raised It podcast with over 330 episodes and counting. Previously, Nathan worked at JP Morgan and Piper Joffrey, and he spent 10 years helping over 150 startups as interim CFO, business developer, and advisor. Nathan has an MBA in entrepreneurship, a BSc in finance, and is a chartered financial analyst. In his free time, he enjoys sailing, traveling, and riding motorcycles. Now, today's workshop dives into real-world fundraising strategies for founders who want to raise capital more efficiently. It reveals insider techniques and hacks used by successful startups to connect with investors, build traction, and close funding rounds faster. The session is designed for entrepreneurs who want actionable advice, not theory, on how to find investors, get intros, pitch smarter, and manage investor relationships with confidence. Just a few quick things before we dive in. We will be watching the chat throughout the session. So if you've got questions, drop them in, and we'll have a Q&A at the end of today's session. I also encourage you to turn your cameras on as we love to see your faces. And then at the end of the workshop, in addition to sharing our special offer, we'll just be running a quick poll to hear about your experience. So please stick around and share your feedback. It's greatly appreciated and helps us to improve future sessions. And that's everything. Let's get started. Over to you, Nathan. Thank you so much.
Awesome. What a amazing introduction. I'm blushing. Thank you for that. Um, Great to meet everyone. We've already done this, so I won't go into this, but I'm Nathan. I run Founder Suite, and I've been basically raising capital for startups ever since I graduated from college, which was a long time ago. And that's all I've done. All I've done in my career is raise capital. So hopefully I can share some of the tactics and techniques I've learned along the way. I always like to start off with how not to raise capital. This is Hunter Walk is a VC at Homebrew Capital here in San Francisco, and I just like this tweet. Will you intro me to investors is too broad to be acted upon. But this is how a lot of people approach fundraising is they just start asking everyone they know, hey, can you connect me to some investors? And that might feel logical, but it's flawed because it's putting the hard work of figuring out who you should be targeting, who you should be going after on the shoulders of the other person. So instead of doing it in this sort of ambiguous way, we really like to think of fundraising as a sales process, right? If you've ever been in sales, especially like B2B sales, it follows a fairly straightforward approach where you're building a list of leads or targets. You're qualifying those leads, make sure they're a good fit. You're engaging with them, getting connected to them, having conversations, and ultimately you're driving them all towards a yes or no decision, towards a close. And that's what fundraising is in a nutshell, right? We can kind of expand on that by thinking of it like a funnel, right? You're top of the funnel, you're building this big list of potential investors, and you're qualifying them, you're screening, filtering, removing out those that have competitors. Then you're where it differs a little bit from sales is you've got to find the right like partner at the fund if you're going after venture funds. And where it also differs is so much of fundraising runs on the warm introduction. We're going to talk about that. But then those introductions lead to pitch meetings where you're presenting your business case, your pitch deck. Those lead to deeper dive meetings. Then you get into due diligence, term sheet negotiation, and ultimately you're selling shares of your company. So fundraising really is just another sales process. Um, and I find when we break it into kind of a step-by-step approach like this, it takes away a lot of the anxiety people have. So let's get into the step-by-step. Step one is to build that top of the funnel. The numbers, how many investors should you target here? Kind of depends on whether you're raising pre-seed, seed, series A. The numbers get smaller as you get later stage, right? But especially pre-seed, seed, you should have at least 200, maybe even 300 names top of the funnel. And the reason is you're going to get rejected most of the time. When I raised our seed round, I pitched over 200 investors and ended up with one seed venture fund leading the round and 10 angels coming in to do the second half of the round. So if you do that math, I ended up with about 11 investors out of 200 pitches. That's about a 5% conversion rate. That also means I got rejected 95% of the time. Keep in mind, I've been raising capital kind of forever, and I'm still getting rejected 95% of the time. That's pretty normal. So just understand that you need a healthy funnel. Where do you build this funnel? I'm not going to make this too much of a sales plug, but we do have a really beautiful database within Founder Suite. You can go in and I'll just show it really quick. Again, won't make this too much of a sales, but um, nice database. You can go in and search by, let's see how many we have total. We have 143,000 investors. You can search by type of investor if you're just looking for venture. You can search by, I think we have several hundred industries. And basically, when you uh, find a venture fund that looks good, you can either add them to the CRM or we have some get intro tools. So you know, I won't go into more than that, but really nice database in Founder Suite that we've been building for years, and we're doing a lot of stuff to it right now to really make it richer and more helpful. But we're not the only game in town. Obviously, Crunchbase has been around even longer than we have. Um, the way I like to use Crunchbase is slightly different. I will make a list of companies similar to mine, but not directly competitive, and I'll plug them in one at a time to see who funded them, right? So you're looking for companies that are similar but not competitive. Like Carta is kind of, they're kind of a quasi competitor to us, but we don't really overlap that much. So if I was raising a seed round, I would add Draper Fisher and Ella Fund and uh, K9 Ventures to my pipeline. But there are many, many places to find investors. This first bullet these are newsletters. You can subscribe to these for free. I like the last two here, Strictly VC. I kind of read that every day. I like Venture Pulse. And basically, when a startup raises capital, they announce it in these newsletters so you can see who's getting funded and who's funding them because they'll list the investors too. Also, when a new venture fund is launched, or when a new venture fund, when a venture fund raises a new fund, they typically announce it in here. And the best venture fund to be pitching is one that just raised a new round or new fund, right? There's a cycle to this, right? A venture fund raises a $50 million fund and they'll do a bunch of new deals for the first 2 or 3 years. And then they save half of their fund to double down on their winners. So again, the best venture fund to be pitching is one that just raised a new fund. And you just skim these, 5 minutes a day with your coffee and you might find some good leads. Conferences are kind of interesting, right? If you're in a niche space like, I don't know, cannabis or blockchain or whatever it is, go find conferences in your space, even go back a couple years, look at the speaker list. Oftentimes, investors will love to be out there speaking to build their own brand. So you can pick up some good leads of people who are interested in your industry. Quora, TechCrunch, Medium, Twitter, or X, and this is all pretty intuitive. But when you find an investor on Founder Suite or Crunchbase or somewhere else, go follow them on Twitter. Go see if they have a Substack or a Medium blog and follow or subscribe. and ideally even start to engage with them a little bit, right? Responding to their posts, maybe they start to recognize your name. This all helps later when we actually get into the fundraising if they kind of recognize you. Also, Medium's interesting. Medium's kind of like Substack, right? I get my Medium digest, and it's always recommending people that I should read, and it's an algorithm driven by who I've followed. So if I'm starting to follow a bunch of investors in clean tech space, they're going to recommend other investors. So it's sort of kind of cool. PitchBook, CB Insights, these are paid databases, really good, but very expensive. There's a ton of other databases out there besides Founder Suite. And, there's a million lists floating around on LinkedIn, some of them okay, some of them kind of dubious and of quality, but there's a lot of databases out there. ChatGPT and other, LLMs have become pretty interesting ways to start your list. And actually, let me show you. This is kind of cool. We just added this feature here. Let me find a good one. Let's just go to Elevate Ventures just for kicks. We added this little chat GPT prompt. So we have details about Elevate Ventures, the people who work there, the deals they've done. But if I want a little more, I just click that and it's going to queue up a prompt to tell me more about Elevate Ventures. Um, and hopefully it works. I didn't actually test this before, but you can get a lot of information. Not all of it's completely reliable. You got to be careful with this. But ChatGPT is great for researching investors and also building lists, right? I can ask it to build me a list of, seed stage clean tech investors, and it will usually do a pretty good job. My only kind of complaint about using the LLMs is it tends to find sort of the most popular investors, common investors, harder to find the lesser known ones. So you might be missing some ones that are good fits for you if you rely on that only. And then I'm going to show you a couple quick ways to tap your own personal network to find investors. So let's go over to LinkedIn first. All right. Oh yeah, here's a we publish this stuff all the time, like the list of investors. But here's my LinkedIn. I'm just on a free version. No, I'm sorry. I have a paid plan. Actually, I have the lower paid plan. But what I want to do, let's say I'm doing a seed round. Let's do a search on something like angel investor, right? And it used to tell me how many people that would turn up, and it would be like 200,000 people, right? But obviously that's too many. So what I usually will do is narrow this down. This is kind of the hack here. I might do a search on first degree connections just to remind myself who I'm connected to directly. But the second degree is the hack here. So here I am, second degree connections. And again, this is still going to be a big number. They've taken away the tally for some reason. But then let's just have fun here. I didn't try this before. Hopefully this works. But let's say I'm in Ontario and I want to raise a seed round. Okay, so I have, let's see how many pages. So still a lot, over 10 pages of results of people who are in Ontario who call themselves an angel investor in their subject line that I have at least one mutual connection to, right? So theoretically, I should be able to get in touch with any of these people because I have a mutual connection. I should be able to ask. But that doesn't mean that Martin and Arati and Christopher are necessarily relevant for my type of business. I consider Founder Suite kind of at the intersection of SaaS, CRM, and now we're doing a lot of stuff with AI. So it's kind of that hybrid of SaaS, you know, um, fintech a little bit. So here's what I do. I go through these results and I right click or command click and open up a bunch of these all at once. Maybe open up 20 new tabs. I'm not going to do 20, but um, open up a bunch all at once. And then I'm going through each one pretty quickly, trying to figure out, does Martin do my type of deal, fintech, SaaS, or does he do something else? And a lot of times you can tell that from the about section. All right. So he's clearly interested in early stage tech startups. That's good. Um, I don't see any industry focus necessarily. A lot of times, okay, so the two things I check most often are the about section, any clues in here that he does fintech or SaaS, or the experience, right? A lot of times people will list deals they've invested in. I'm not really seeing it here. I might click through to his website just to get a feel for him. Nothing's really jumping out at me, but so I'm gonna just pass on him and Command W on a Mac closes that up, and I move on to the next person. Let me look at Arati, right? Entrepreneur, angel investor, backbone. Okay, so she's an investor collective, companies and brands led by women and people of color. Well, I'm a little bit on the wrong demographic there, even though we at one point had more female engineers than male. That was kind of unique. And she was at Shopify. So I'm kind of skewing her or pigeonholing her into e-commerce. So probably not a fit. Founders fashion. So I don't really do any of that. So again, Command W, close, move on to the next person. But I think you kind of get the pattern here. I'm looking for any clues. Um, does this guy uh do my type of deal? If Christopher did do SaaS, fintech, cultural due diligence, then what I want to do is I would add him to my investor list, Christopher Venantius, and I want to click that link and identify my best mutual connection. So who do I know of these three people the best that I would ask for the introduction to Christopher, and I would make a note of, Alex in the connector field in my CRM or in my spreadsheet, whatever I'm using to track. So that's kind of a quick hack for using LinkedIn. And, I'm going through this Command W, just closing these out, looking for clues, adding people as I find them. I'm going to show you one other thing I did with our own CRM. And again, I'm showing you how I did this in Founder Suite, but you can do this in a spreadsheet, frankly, or any CRM. This is my investor pipeline, right? This is what I'm using to keep track of all the investors I'm talking to. But the hack here is this column called Steve B Leads. So what I did is I made a column, custom column. I called it Steve B. And then I went into settings and I invited Steve Bennett into my account. And that you can do this on the free plan. We have a free version. You can do this on the free plan. I said, hey, Steve, I'm building my investor pipeline. I've made you a column. Would you populate this column with some investor names that, ideally invest in fintech SaaS that you would be willing to introduce me to? And he did. He came in and he added, I don't know, 10 or 11 names to his column. And I repeated this process with 5 or 6 other advisors of mine and generated like 60 good warm introductions by having a structured way of asking people to open up their network, right? And so just a really, instead of just calling up Steve, like, hey, do you know anyone I should talk to? I actually gave him a structured way of opening up his Rolodex or his network. So, I could go on and on. There's an explosion of places to find investors these days. It's becoming easier and easier. It's harder to sort of sort through all the volume. But as Yoda says here, once you start to kind of look for investors, you'll start to see them all over the place. And hopefully I've given you a few new tips. I already showed you that. Okay, once we've built that list of investors of call it 2 to 300, we actually want to qualify that list and start to remove people from that list. And, basically going back to fundraising as a sales process, the best salespeople don't just chase every prospect that comes in the door. They qualify their leads, they prioritize their leads. And if you do this, it will make your fundraising go much more efficient if you are pursuing people and funds that invest that are looking for your type of deal. That sounds so obvious, but you would not believe how many times I see founders going after investors. I'm like, have you even looked at them? They're a growth stage venture fund. That means they do series D rounds, and you're going after that. Like, you have to spend the time to qualify your leads so that, what remains when you've removed people are people who are looking for your type of deal. So remove anyone who's invested in a competitor. Don't even bother. They won't fund you. They'll probably share your deck with your competitor. Number two on the list here, if it's a venture fund and they haven't raised a new fund in the last couple of years, as I mentioned, they are probably only doing follow-on deals to their existing portfolio company. So, you still might meet with them, but if they haven't raised a new fund, they're probably not doing a lot of new deals. Same with angel investors. If you find Christopher, and all his deals are from like 5 years ago, he might be taking a break. Wrong sector, wrong stage, wrong geographic location. There's no excuse. If you're a fintech startup, there's no excuse for reaching out to a medical devices investor. People do it all the time. It just boggles my mind. Like, have you looked at their profile? Have you looked at their portfolio? So just make sure you're on target with their thesis, their sector stage. Bad reputation. This is a little trickier. We're trying to build reviews, investor reviews into our site. It's hard to get people to leave reviews, but we're trying to do that so that, investors who behave badly get surfaced. It's tricky to do that, but you have a great resource with Innovation Cluster, to network and share kind of intel about investors. I know Y Combinator has something called like Bookface or something where it's like this private intranet where people chat about investors. Um, I've never actually seen it. I'm curious to see what that looks like. But anyway, you obviously want to be kind of doing your own due diligence on investors. And, you know, once an investor writes a check, they're pretty much locked in for life. You can't, I've only seen like one startup in my 20 years of experience that was able to buy out investors and get rid of them. So you're kind of stuck with them, right? So you want to be choosing wisely. And then ideally, as you're going through this and finding people, you want to be finding partners. If you're going after venture fund, don't waste your time if you can avoid it, chasing analysts or associates. You want people who can make decisions on a deal, and that's usually a partner. So in general, I recommend removing about 25 to 30% of your starting list so that what remains is a really highly focused, highly targeted list of people who are looking for your type of deal. Your fundraising will go so much better if you spend the time to qualify them. Okay, how do we get connected to these people? All right, this is always, a big question. So I'll show you two ways. One is LinkedIn, right? Plug each investor into LinkedIn, see if you have mutual connections, um, and pick your best mutual connection. I'm gonna do one more little product plug, so bear with me. But we also let me find a good one here. I'll just pick Drive Capital. We also launched something called Get Intro not too long ago, and this is okay. So these are people who work at Drive Capital. I don't actually know anything about Drive Capital, but these are people who work at Drive Capital. Maybe I want to kind of look at them, see what they've invested in, what this guy's invested in, Andy Jenks. But if Andy looks good to me, it looks like I have 7 paths to him. This is looking at my contacts, my connections, my LinkedIn, and then let's take a look at my paths. Okay, so I have these people as mutual connections to Andy. And I can do a little bit more work and see how. Okay, so Andy and James Frankel both worked together for a couple years. Or Nova, they also worked together, Bottlenose, for a couple years. So you can get a little bit of signal as to how your connector, these are my connectors, know the investor, Andy. And then I actually know James Frankel pretty well. So then I would say I would pick James, I know him best, and just be like, hey James, I see you can, Andy here. Maybe I'd include a deck here. I would maybe customize this a little bit and then boom, send it out asking for that intro. So we're trying to streamline this process because it's always been pretty time consuming. That's the get intro button. So either LinkedIn or using a tool like FounderSuite to find those warm intros are your best bet. If you don't have any mutual connections to your dream investor, what do you do? Common question. My suggestion here is to, for example, with Tim, go do some research, look at what Tim's invested in over the past 6 to 12 months, cold email a couple of those founders that Tim has recently invested in, and just be like, hey, I saw Tim invested in you. I'm doing XYZ. It's interesting because we have growth rate or we're doing something, make your business sound interesting, but then be very casual. Like, could I buy you coffee or buy you lunch and just pick your brain a little bit about working with Tim? Is he pretty active? Has he been supportive? And you get a rapport going with that founder. It's typically okay to ask that founder for the intro. And the reason this works pretty well as a backdoor way into getting those intros is Tim spent, 3 to 6 months getting to know that founder, built up a level of trust there. And that founder was hustling for intros just like you're doing now. So it's a really good way to get those intros if you don't have a network. It's kind of working your way through their portfolio founders. Founders are good about helping other founders all over the world. I don't so it's the great backdoor hack. The last thing on the list you can do is the cold email. Cold email is really not very effective. I was on a conference, this is 2 years or so ago, but it was with Jeff Clavier of Uncork Ventures, a really active seed stage venture fund. And the question came up if he had ever invested in a deal that came in over cold email. He's like, yes, we've done two deals that came in over cold out of 723 portfolio companies, right? So it's not impossible, but your odds are pretty low if you're doing cold email. If you're going to do cold email, though, I've done cold email. Sometimes I just can't find any way into an investor. If you're going to do cold email, my favorite phrase is show me you know me, right? Show the investor in your email you have a specific reason for reaching out to them. Reference a blog post, a podcast they were on, whatever. You have a specific reason for contacting them. That will separate your cold email from the thousands of cold emails these guys and gals are getting every day, right? There's so much spam going on. So if you're going to do cold, make it highly personalized. Oh yeah, I already showed you this. This is our fun little product. What's a weird little thing? Um, the Get Intro tool, and that's people are finding a lot of success on this. Now, obviously, if you don't have a much of a network, it's the results are going to differ, but definitely worth checking out. All right, what is that little line? Anyway, um, now that let's recap our steps here. We built a list of 300 investors. We narrowed it down to the top 200, 250. We removed, bad fits. We've mapped our connection paths as best we can, and we're about to start fundraising. You need some way of organizing this list. You're going to be reaching out and talking to a couple hundred investors over the period of the next 2 or 3 months, right? I used to build these spreadsheets for clients when I was a consultant. The spreadsheet's fine, or Notion docs or whatever, Airtables, but they get pretty messy pretty quickly. About week two, you're going to be drowning in a messy spreadsheet. So last sales pitch, I think, we have this really nice investor CRM to kind of keep track of your pipeline, where you're at with every investor, and there's tons of functionality built in of keeping track of like next steps, adding things to your calendar, um, all kinds of stuff. So I won't even go into all that. But my emphasis I want to make is you need some way of keeping track. Fundraising runs on momentum and speed, and you never want to be the bottleneck slowing things down because you're not well organized, right? You want things to be moving fast. That's how deals get done if things are moving fast. So use Salesforce, use HubSpot, whatever, use Founders Suite, use whatever it is, so you have a system in place to keep track of every single action item because you're going to be talking to 200 investors. Every time you have a meeting with them, it usually leads to two or three action items that have to happen afterwards, right? So you're literally going to have 1,000+ tasks to get done in the next 2 months. Sticky notes aren't going to work. All right, enough on that. Okay, time check. We're good. Before reaching out to investors, before actually, kicking your fundraising off, make sure these slides are super old, but make sure your deck is really good. Give your pitch to 10 times to friends, attorney, other founders who will get people who will give you honest feedback about your deck. Your story needs to be tight, it needs to be high level, not cluttered, not, full of stuff. It needs to have a story arc to it. It needs to ideally kind of tap into my logical brain and my emotional brain. We could spend an hour talking about what makes a good pitch deck, but make sure your pitch deck is awesome. Probably one of the top two or three reasons I see founders fail at fundraising is their pitch just it sucks, right? It's cluttered, too much text, it's confusing. And I see this all the time. Um, Investors, you have to do the test on the phone, right? If they're spending literally 30 seconds flipping through your slides on their phone, if they're skimming it, are they still going to get the story and what you do and why you matter and the what makes you exciting, right? Because they're not going to spend time to read dense stuff. So make sure your deck is awesome. Ideally, have a little financial forecast showing how you're going to spend the money, right? Where it gets you as a business, what the business model looks like as you scale, all that good stuff. Okay, we're about to kick things off. When I went back to step three and I mapped the connection paths, you might find that you have someone in your network who's like, I call it a power connector. Jeff is one of these guys. And Jeff works at NASDAQ. And I noticed he was connected to like 20 people I wanted to get to know. So instead of asking him 20 times, hey, Jeff, do you know Ann? Do you know Jennifer? Do you know Tom? I put together an email like this, say, hey, Jeff, I see you're connected to all these people. Who do you know on this list that well enough to make an intro? He can just go, yes, I know Arul. Yes, I know Tom. I don't know Payam. I don't know Mamoon. Jessica's not investing anymore. Wesley, I don't really know. He can just go, yes, no, yes, no. Boom. Making it easy for him. And then this kind of goes, this is the intro request email. This is an important slide. I showed you a version of the intro request email. This is like a slightly more robust version of that intro request email. Let's go through it real quick. First of all, notice how short this is. Another common mistake I see founders make is in the intro request email, they'll attach a 45 megabyte PowerPoint and have 5 paragraphs of the entire company history. That's a fail. That's not going to get read. That's going into the delete button right away. Less is more when fundraising. So notice how short this is. Subject line, very important. Hey, Jeff, can you introduce me to target investor? And then what are we doing? Raising a seed round. And then we had a lead investor at this point. We had 2/3 of the round committed. Whatever is the single most exciting, sexy data point about your business, put in the subject line because these guys and gals are getting hundreds of these a day. You want your email to kind of pop out. Then let's look at the body. Jeff, good chatting with you. As mentioned, I'm raising a seed round. What do? We make this investor management reporting platform. Here's a link to our site so you can check it out. A lot of people forget that step. And then the ask, could you introduce me to target investor? Why? Because he's got a good track record in our industry, fintech SaaS. And then I noticed this guy, Clint, went to the same tiny little college in Iowa my dad went to. So I put that in there to personalize this a little bit, a little added flavor, and then include a link to our deck. And this is not our full deck. This is what I call a teaser deck. This is 5 slides. Problem, solution, market, traction, team, right? That's all. Problem, solution, market, traction, team. That's enough for Clint to click through it and see what we do, where we're at, kind of, traction wise, stage wise, who we are, and what's the big vision or problem we're solving. That's enough for him to kind of make a yes or no decision. Hey, Jeff, these guys are too early. No, thank you. Pass. Hey, Jeff, happy to take the intro, right? You actually want to use your teaser deck as another way to qualify these investors so that you're not wasting time. I can't tell you the number of times I drove from San Francisco down to Palo Alto or wherever, hour and a half drive in traffic to meet with an investor who's like, "Oh, you guys are so early, talk to me in 2 years." I'm like, I just wasted half a day. Yeah, going to meet you guys, right? So you want to use this deck as a qualifier. And then Jeff, my connector, can just go, boom. Hey, hey, Clint, can I introduce you to my friend Nate? Boom. Hey, Jessica, can I introduce my friend Nate? Boom. I'm making it easy for my connector to do his job. This slide, someday I need to remove this because this show is getting long in its legs. But this is from HBO Silicon Valley. Go watch it if you haven't. It's several years old now, but it so perfectly nails raising capital and all the funny quirks. The guy in the middle here is Richard. He's the CEO of Pied Piper. He's an engineer. all he really wants to be doing is writing compression algorithms, right? He's a kind of a nerd, but he's got to get out there and talk to these investors who are all very smart. 40% of all VCs went to Stanford or Harvard. Um, that's a real stat. Many have huge egos, and investing is what they do all day long, right? So they're experts at it. Whereas probably for you, if you're listening to this talk, this is your first time doing it. So there's an automatic, bit of a power disparity there. That's okay. Just treat it like a game, have fun, channel your inner hustler, and you're going to learn a lot about your business, whether these people write checks or not. You're going to get a lot of interesting feedback. So treat it a little bit like a game and kind of fun, right? Some hustle tips here. Doing the intros in parallel. This means asking your connectors for those intros all in a pretty condensed time frame. We call that the blitzkrieg approach. And what we're trying to do is get momentum going for your deal. Investors, this is going to sound weird, but investors can smell when a deal has momentum. They can also sense or smell when it does not, or worse, when a deal is stale. So you don't want to walk into it, right? You want to walk in smelling like momentum. How do you do that? You have a lot of meetings in a pretty condensed time frame. We call it calendar density, right? So that means, investors always ask you during a meeting. They're gonna be like, "Oh, Nathan, nice to meet you, Nathan. How's the round coming together?" That's their little way of probing. Does this deal have momentum or not? And you want to be able to answer that like, it's going pretty good. We just started fundraising. I've got 10 pitch meetings this week. I've got 14 lined up next week. Running a pretty tight process here using Founder Suite, of course, and aiming to close this round out by the end of Q2. I wouldn't give a hard date. I wouldn't give an exact date. I would give kind of a general timeline, but you're signaling with that answer, other people are interested. You're running a process, you're running running a professional process, you have a timeline, and so if they're even remotely interested, they kind of have to move to your time frame here. Um, your pitch should be getting better and better every time you give it. Have your co-founder sit in on the first couple pitch meetings and just write down every question the investor asks. Build an appendix slide to answer those questions, and just be improving your deck. And then, how are we doing? Okay, we're okay on time. Two of my very favorite funding hacks I'm going to show you real quick. One is sending out a regular investor update, progress update, to everyone in your pipeline who has not told you no. So let's go over to it real quick. Um, you could do this in an email. You don't need our tool, but this is an investor update to prospective investors. These are people who have not written me a check yet. These are people I'm targeting. First of all, let me just show you how short this is. It's very short. And it should take you half an hour or less to write. This first section here, let me zoom in just a little bit. First section here is just what do you do, right? It's a couple lines about what you do. Keep it short, keep it sweet. Maybe a traction point here, which you would update, right? But this first section, you basically reuses every single update. It's just what you do. Second section is what happened last month that is cool, impressive, exciting. New product launches, new growth, new traction, new partnerships, maybe some press coverage, whatever it is. Put your wins in here right after the update. Then put in whatever you're building as an image. Even if you're doing something very industrial or scientific or esoteric, put in some image of it. Humans are visual creatures, right? Then some metrics, whatever those metrics are for you. And then what's happening next? What are you building next? What new deals do you have coming out the pipeline? And then put an image of your team. Who are you? And even if you're four dudes in lab coats in a lab or whatever, put them in there. Again, people are visual creatures. And that's it. Now, let me zoom out again. That's all it has to be. What you do, what happened last month, what you do in terms of a visual, your metrics, so some numbers around that, what you're doing next, and then who you are. And that's and if you start to send this, monthly to everyone in your pipeline that you're talking to, or even better, one of my favorite funding hacks I've seen people do is you start this process 6 months before fundraising. So maybe you're already fundraising right now. That's okay. Still send this out. But let's say you're going to do a Series A, this fall in October. You build your list of Series A investors. You reach out to them with a permission email, which we have a little template for the permission email, basically saying, "Hey, I'm not raising money right now, but you're right in our sweet spot. I've been following you, for a while now. This is what we do. We make this software for raising capital. Can I have your permission to add you to we send out a monthly update list or a monthly update on our progress. Can I have your permission to add you to my distribution list?" And why that permission email is so powerful is you're not asking them to write a check right now. You're not asking them for time. You're not asking for a meeting. You're just asking permission to send them a monthly update on what you're doing. And if you start to send this now, right, you get um, April, May, June, July, August, September. You get like 5 months of these. That's five touch points with the investor where they're seeing your progress, steady, steady progress. And then in the one in September, right before your fundraise, at the top you say, "We're going to be kicking off our Series A next month. Let me know if you want early access to our pitch materials." And I've seen deals get swooped up by investors because they were nurturing these relationships along the way, um, without even going out and fundraise. So really powerful thing. Part of this is just marketing 101, right? Investors are just bombarded by pitches and people emailing them all day long. And so if they start to see a pattern with your business, like, wow, these guys every month, they're doing something pretty cool. That's really, really powerful. All right. I'm working on time here. And then last but not least, set up a data room. That's making me crazy. Let me close my calendar. Um, let's set up a data room. Let me see if I have one open. I hope I do. Okay, yes, I do. So this is an example of a data room. It's really simple. It's folders, corporate docs, pitch materials, financials, customer details, uh, product roadmap, team and advisors. So you set up a data room with these folders, you populate it with your folders, your corporate documents, your articles of incorporation, other, things like that, your pitch materials, your financial models, historical financials, all that stuff. And then one of my favorite hacks is there's two reasons for this, right? Why would you set up a data room? One is you look really professional. If you start to go down the pipeline with investors and they're like, all right, we're interested in putting down a term sheet, but first we have to go through due diligence, or sometimes it's in parallel. They'll give you a term sheet and then you go into due diligence. When I got my term sheet from our lead investor, I think I got a term sheet on a Friday, and on Monday they sent me their due diligence list, and it was like 200 things they needed. um, I'm not exaggerating. There's like 200 things they needed, all this stuff, articles of incorporation, historical financials, everything, right? I was not ready. I was not prepared. And it took me about 2 to 3 months, about 2 months to scramble to get all that stuff together. And the fundraising slowed down because I was the bottleneck because I wasn't prepared for due diligence. Now, contrast this with they send me a term sheet on a Friday, and on Monday they send me their due diligence list. I could just 10 minutes later say, "Here's access to our data room. You'll find all the files there." Boom. I look like a rock star, right? So that's number one reason for doing a data room. The other thing is you can use it as a kind of a forcing function. So you've got your pipeline, you've got all the people in your pipeline, you've got all the people you've had conversations with, right? Pitches, stuff like that. I have a column here, invited to data room. What you can do is you can reach out to everyone you're talking to and basically say, "I'm opening up our data room, um, April 1st through April 21st, right? A limited time window. We're going to open up our data room. If you're interested in potentially putting down a term sheet, let me know and I will invite you into our data room." And then you're going to get people like ignore you, stuff like that. But if people raise their hands, this, "Yes, I'm interested. Please give me access to your data room," that's a really good buying signal. So you're kind of forcing people to show their cards a little bit by inviting them to a data room, but only upon, kind of signaling interest. I hope that makes sense. I didn't explain that very clearly, but I hope that made sense. We can talk about it in Q&A. So, sending out a regular monthly update about your progress and setting up a data room, two great hacks to do. And then the more you can treat fundraising like a full-time job, the faster it's going to go. Just know it's stressful. All right, I am going to skip some things. Just spend a minute on. All right, you've been fundraising for a couple months now. Let's try and bring this thing in for a landing. Every time you have a pitch meeting, don't close your Zoom or don't walk out of the pitch until you've done these first two bullets. Ask for interest level, next steps, and make them chase you a little bit. For example, at the end of the pitch meeting, say something like, I really appreciate your time today. Thanks for having me. I would love to hear your interest level, what your typical check size is, and what are next steps. Say something like that, and then just stop talking. You'll usually get a generic response like, "Oh, we'll talk it over at our Monday partners meeting, get back to you." But if the response includes a next step, that's a strong buying signal. Number two, make them actually chase you a little bit. So again, end of the meeting, be like, thank you so much for your time. I'd love to hear from you, Mr. Investor, how you typically help your portfolio companies and how you would help me grow Founder Suite, right? And then stop talking and make them actually pitch you a little bit on why you should let them into your deal. And as you get momentum going, investors can smell that and they're like, oh, I'm gonna have to like apply to get into this deal or hustle to get into this deal. And that creates like I've seen it turn into like a piranha feeding frenzy, right? Because they know, because every investor has lost out on a competitive deal where there were more investors trying to get in than there were seats at the cap table. So you're kind of signaling they might have to hustle to get into your deal. It takes multiple meetings to get that first term sheet. Once you get the first term sheet, you can use that to get everyone else to kind of, raise their hand or opt out. It can be hard to get a no. In my CRM, I actually have three columns. One's a hard no, one's a no response or ghosted me. You're going to get a lot of those. Another one is like not right now, which means, when people say, oh, I like it, but you're too early. That's a no, but that's a not right now no. And I keep them on my company update distribution list, right? So understand their flavors of no. Anything, anyway. I'm going to skip Paul Grimm's Handshake Deal Protocol. We'll send you the slides. You can check that out yourself. Last but not least, important point I want to make is if you're going to raise money, don't quit. Don't even slow down until you get the check. My dad joke of the day is how do you know an investor says yes? When the money hits your bank account, when the wire clears, when the check clears. Everything before that, term sheets, verbal yeses, are just conditional maybes, right? So the only true yes is when the money's in your bank account. Go out, celebrate for a little bit, and then get back to work knowing the expectations of what you're doing is gotten higher, right? You might be raising money your next round, 6 to 12 months from now. Start this process early. Start building your target list. Start reaching out, sending them a company update so they get to know you over a period of time and go have fun. I'm going to spend 5 seconds on this, but we have a really good blog at Founder Suite with tons of more fundraising content, investor lists, all kinds of stuff. And then last plug I'll make is the podcast called How I Raised It, interviews with founders and how they raise capital. Uh, and I'm happy to connect on LinkedIn. Maybe mention you're on this webinar, you're part of Innovation Cluster, just because I get a lot of junk on there. So mention, and I'm happy to connect with you. And more questions you can answer. But let's see. I think we have a few. You want to take it over there and we'll do some Q&A?
Yeah, for sure. So before we get into the Q&A portion, I just want to share a couple of notes from the innovation cluster side of things. And so, I mentioned at the start, we have an exciting offer. So as valued members of our community and to celebrate the launch of this incredible partnership with Founder Suite, we are excited to offer a 10% discount on the 6-month plan with Founder Suite. So if you scan the QR code on the screen and use the code IC10 to sign up, you can start using the platform today. Perfect. So we will also be emailing this out later, but on to the next slide quickly. So we are also going to launch a poll right now, just to get feedback on the workshop. So if you want to take the time to fill that out, that would be greatly appreciated. So we also have another great workshop coming up in April, and it's hosted by one of Innovation Cluster's experts, Moshe Mikanovsky, on digital product scaling. Scan the QR code there as well if you'd like to register for that event. And you can, Nathan, if you want to go on to the next slide as well. Perfect. So I also want to share we are on the final few days of accepting applications of our new program, Level Up Validate, which is designed to help you deeply validate and pressure test your business. Applications for this program are closing this Friday, the March 20th. So if you need help with validating your business or your product, please apply for the program. And then we regularly share our upcoming programs on all our social media channels. We'll drop the links to our Instagram and LinkedIn in the chat as well. So feel free to follow us to stay up to date on all of our upcoming opportunities. And lastly, on to the last slide. If you found today's workshop valuable, we would truly appreciate a Google review. So you can scan the QR code to share any of your feedback. It really does mean a lot to us. So again, I will be sharing all of the links and the recording and the slide deck in an email later on today. And now I'm just going to go into the chat quickly for some questions. There was a good question that came up about approaching VCs when you are in early traction. Um, and so you when you approach an early sorry when you approach a VC that says they like to invest in early founders, but they still request you need a bit more traction and validation, or you need to be in Series A. So how, as an early founder, do you approach VCs better at this stage?
Yeah, it's a good question, and it's frustrating for founders because a lot of investors on their website or wherever say they invest, across the spectrum, seed to Series B, right? But really, if you look at their portfolio, they're doing later stage deals. So it's like there's a lot of like misleading cues out there sometimes that make it frustrating because they don't want to, it's optionality for them. They don't want to miss out on the next Facebook or whatever by saying they don't do seed, but they really don't do seed very often. So anyway, what do you do? I would approach it with kind of like what I was mentioning using investor update thing. Like, hey, here's what we're doing. I know we're a little early for you right now, but I'd love to just familiarize with what you're doing, send you my company update, my monthly update, so you see our progress because we're moving fast. We're going to be where your sweet spot is, before a matter of months. Kind of introduce it like I'm not pitching you for money right now. I'm pitching for you to get to know you and for you to get to know me a little bit. And then that actually takes a lot of pressure off because you're not pitching for money right now. You're just like, I'd like to build a relationship with you. Start this early so you get to see our progress. Basically like that.
Perfect. Another question that has come up in the chat. How is a product that is in blueprints and needs research looked upon by investors generally?
You're not gonna like the answer. That's pretty tough. It's pretty tough because you have to put yourself in the shoes of investors. They Now, thousands of investors out there, but there are hundreds of thousands of startups out there, all chasing, this finite pool of money. And so if you're an investor and you have five things on your desk, five pitch decks or business plans on your desk, and these four have lots of traction and pipeline studies or pilots, this one doesn't, is blueprints. I mean, there's a lot more risk to that one, right? The execution risk and technical risk is still there, whereas in the other ones that's been reduced. So it's gonna be tough. You could still start to build those relationships. Again, I keep going back to this. Building relationships with investors is never a bad thing to do, even if you're too early for what there are now. And so you could do that now. They might not give you that much time and attention because you're so early, but still showing them what you're doing. And if you're right in their sweet spot, investors have theses, whatever, about what they're looking for. And if you're in their sweet spot, they want to get to know what's going on.
Perfect. And another question that has popped in the chat. How often do investors buy on validated products with high market need where the digital product is not yet built?
Boy, that's a tricky one because I think I'm missing a few details of that. Is it a physical product that has traction that doesn't have the digital product? Is that how you're interpreting that?
Um,
Or-
I'm not too sure. Maybe it will allow the person to add a bit more clarifying details. There is another question I passed as well that I think would be a good one. This person used an example of being in health tech, but when looking for investors, if you're a company that is in kind of multiple tiers, so you're in health tech, but also just general tech, is it better to target health tech or just tech, or how would you approach something like
Yeah,
that?
I like this question because many startups do straddle multiple industries. Like even when I was giving myself an example, we're kind of fintech, we're kind of SaaS, and what I recommend doing is like I tell all the time to founders, build two or three different pipelines. One pipeline for health tech investors, another for, whatever other type of tech you are, mobile tech or whatever it is, right? And kind of A/B test. And you might find yourself like, wow, I'm getting a lot more traction on the mobile tech side of things, like kind of pitching as mobile tech with a healthcare flavor versus health tech with a mobile flavor, kind of A/B test. So just build like two or three different pipelines, segment your investors, and see where you're finding the best results, best responses.
Okay, perfect. And then the person that asked the previous question
Mm.
clarified it's an AI product
Okay.
for law enforcement. So it looks like it's not a physical product, it's a digital product.
Okay, interesting. So, can you repeat the question? I forgot already.
I'll go back and reread it quickly. And then that will be the last question for today. How often do investors buy unvalidated products with high market need where the digital product is not yet built?
Okay, got it. Okay. So that's cool. I mean, one of the things I say all the time is traction cures all ills, right? If you have traction, it solves so many problems with fundraising and everything else. And in many cases, if you have traction, you might not necessarily have to go raise money, right? So traction is great, validation is great. You've removed the technology risk, the market interest risk. You've proven the market need is there, and I think you just have a clear roadmap. It's like probably an easy slide showing sort of the technology evolution from whatever it is today into more of an AI thing. We're doing this ourselves, right? Many companies. I'm reinventing Founder Suite as more of an AI forward company. Everyone's doing something similar to that these days, right? And so I think just showing kind of your roadmap, timeline around that, what features will look like, 3 months from now, 6 months from now. Obviously, things change, but something like that can show you have a clear vision for this migration. So,
Amazing.
yeah,
Alrighty. Thank you so much, Nathan. That brings us right to 1 o'clock Eastern Standard Time or 10 o'clock your time. If you do have further questions, Nathan is happy to connect over LinkedIn. Again, I'll be sharing the recordings and the slide as well as all the QR codes that we shared in today's presentation. But thank you again, everybody. I hope you all have a good rest of your day. Happy St. Patrick's Day, and I hope to see you at future Innovation Cluster events. Thanks, everybody.
thank you. Thank you. Over now.
Bye, everyone. Bye for now.